All right. So it looks like history might be repeating itself. And the history of 2008, the global financial crisis, and 2026 so far is shaping up to not be a great year, might be the exact same year. So let's take a look at the data. What happened in 2008? Well, first, we had high oil prices, which you can see here. And in 2026, you can see our oil prices are starting to go up. And with the war in Iran, who knows how that's going to play out in the long run and where oil will finally land. But there's another similar thing that went on in 2008. In 2008, we had the crash of the subprime mortgages. And in 2026, we're starting to see issues with the private credit market. Private credit sounds like an exclusive club. It's a club you don't want to be in. And it's not just small players like Blackstone, it's BlackRock, it's JP Morgan, it's Deutsche Bank. They're all having issues with their private credit portfolio, and in some cases, limiting redemptions out of it because private credit is subprime. It's basically subprime loans or higher risk loans. The higher risk loan, the higher return you get. Similar to individuals who took money out on their home equity line of credit and then gave it to a broker to go private lend out, and then they find out later they can't get that money back. Same situation, but on a bigger scale when it comes to bigger banks. So a bit of a problem here. We've got the higher oil prices that you saw in 2008, and now this private credit bubble or this private credit issue now. So it seems to be a very similar situation. So will there be a market crash this year? Potentially. With this stuff going on, if history does repeat itself, it is giving us the signs to be very wary of what's going on. And all this is going on when unemployment is going up. The US employment data is awful. They haven't added a new job in over a year. And it's going to be tougher for central banks to combat inflation because if they increase rates in a time when the economy is already on the skids, that's going to put more pressure on people. So it kind of limits the central bank's abilities to do much when it comes to these situations here. So it is turning into a bit of a perfect storm. And on top of all that, we still have the AI bubble on top of that too, right? Basically AI companies investing in each other to keep that all rolling. So we'll have to see. 2026 is going to be quite the year. It's already been quite the year, but there's going to be potentially other events to make it a little bit worse.